Welcome to another video lesson from Sketchnest.com. I'm Brandon. Let's jump right in. In this video we're going to be talking about the preliminary steps you should take when buying a home. Through our parent website, Home Buying Institute, we receive tons of emails from homebuyers, and one of the most common questions we receive is how to begin. In other words, what preliminary steps should I take when I'm planning to buy a home? That's what I'm going to talk to you about today. One of the first things that you should do is start saving money. That's what this little piggy bank represents here. The reason for this is that you're going to need a down payment, for one thing. Your down payment might be anywhere from 3.5% upwards to 10% or even more, depending on the loan program you're using. But the days of zero down payment mortgage loans are over. So you're going to have some kind of mortgage payment to put up against your loan. You're also going to have to pay closing costs. Closing costs can add up to several $1,000s, and you have to pay this money on the day you settle on the house. You're also going to have moving expenses when you move into the house. You're going to have to pay for movers and some other costs related to that. So start saving money. The more money you save, the better. This is also going to help you get approved for a mortgage loan because they're going to check your bank balance to see how much money you actually have. Another thing that you should start doing is calculating your housing budget. This is the monthly budget, the monthly amount you can afford to spend toward a mortgage payment each month. In other words, you need to look at how much money you earn each month after taxes, your take-home pay. So from that number, you need to subtract the money you spend each month on your various expenses, ranging from car payments to grocery bills to savings contributions to entertainment expenses. And after you do all that, you can figure out how much you can afford to put toward a mortgage each month. Do this early on. Do it before you start talking to mortgage lenders, because it's possible to be approved for a loan that's too big for you. It happens all the time, and that's how people end up in foreclosure. So our first two steps, we're saving money for the various costs related to buying a home. We've established a housing budget, a monthly limit that we will not exceed when taking on a mortgage loan. We're also going to check our credit report and credit score. These are two different things. Your credit report is a document that or a record of all of your previous financial actions, mainly the debts that you've borrowed and repaid. Credit cards, student loans, personal loans, things of that nature will show up in your credit report. You want to make sure that there are no errors in your credit report because they can drag down your credit score. When you apply for a mortgage loan through a lender, they're going to check your credit score. Your credit score is based on the information in the report. So if there are mistakes in your credit report, it can drag down your credit score. It can hurt your chances of getting approved for a loan. So you want to check your credit reports to make sure they're accurate. You want to check your credit score to make sure it's good enough to buy a house. If you find out that your credit score is 510 on the FICO credit scoring scale, you're probably not even going to get approved for a loan. That's why you need to check these things early on before you start applying for loans. So we're saving money. We've established a housing budget for ourselves. We've checked our credit report and score. Next thing you should do, or you can really put this in any order, is start learning about the different types of mortgage loans. Which type is best for your situation? Are you staying long-term stay? Do you want the predictability of a fixed rate mortgage? Are you going to be in a short-term situation where you might save money by using an ARM loan? Do you want a smaller down payment that can be acquired through the FHA home loan program? Are you a veteran? Do you want to use the VA loan program to minimize your upfront costs? You need to research the different types of mortgage loans to find out the pros and cons associated with each loan and to match the right type of loan with your situation. After all of this, what you might want to do is get pre-approved for a loan. This is when you sit down with a mortgage lender and you say, look, I'm trying to buy a house. Can you tell me what you're willing to lend me? They will look at your credit report. They will check your income and the amount of debts that you have. They'll look at everything related to your financial background, and they will pre-approve you for a certain amount, meaning it's not a guarantee, but it's a strong indication that you will receive that amount from that lender. So that's how to begin the home buying process. Save your money. Save as much money as you can toward your various costs. Establish a budget, check your credit, learn about the different types of mortgage loans, and then when you're ready, get pre-approved from a lender and find out what you can get. That does it for this lesson. If you'd like to learn more about this topic and watch more videos, you can visit us online at sketchnest.com. Thanks for watching.